Thank you very much. Delighted to moderate this panel today. We've seen an explosion in the number of regulatory sandbox, 23 at the last count. Those that are termed regulatory sandboxes, but I'm sure there's been one announced that I may have missed. Great time to talk about this as regulators have embarked on a period of transformation, everything from proof of concepts to innovation offices. Sandboxes obviously have probably attracted the most attention. And some of the key themes we've seen coming out will obviously draw out today around market competition, competitiveness, attracting investment into the market, financial inclusion and market infrastructure. Before we start on today's questions, it might be helpful, I thought, to give a quick intro into our panelists and the regulator they represent, because obviously regulators have a different remit and their approach to it. So we could just start off on the panel.
Thank you very much. I just want to introduce quickly. My name is Buncha from the Bank of Thailand. Our banking supervision is we introduce some kind of sandbox, and we mainly focus, we allow all of new technology to play and to come in, and we want to make sure that our regulatory sandbox is a very balanced between innovation and regulation. And also we want to promote some kind of risk management, and also we make sure that the consumer are well protected in our environment.
So I come from the Australian Securities and Investments Commission. So we are the market conduct regulator across a broad range of financial services, everything from deposits right through the derivatives, non-cash payments as well. And so that's our broad remit. We're not a prudential regulator.
Yes, my name is Mirel Terbraak. I work for the Netherlands Authority for Financial Markets. That's also a conduct authority. That's pretty similar mandate. In our innovative work, we work together with the Dutch Central Bank. So it's important to mention we have a Twin Peaks model in the Netherlands. That means conduct and prudential supervision is separated. So I think, yeah, that's about it.
Hi, I'm Richard Teng from Abu Dhabi Global Markets. We do both prudential as well as market conduct regulations across banks, insurance companies, and capital markets intermediaries. I'm from Singapore originally, so it's great to be home. There's a warm welcome for being home.
Thank you. Okay, I'll start off with the basics. I mean, the term regulatory sandbox actually encompasses a very broad range of approaches, from reg labs to red sandboxes and others with very different remits and mandates. So do we have an agreement as to what a regulatory sandbox is, or is the term too vague to be useful? Because obviously they have such different approaches. I'm going to start with Mark.
Sure. My understanding from most jurisdictions is that a regulatory sandbox is just an environment created within the regulatory framework for which concept testing can occur. Now, a number of jurisdictions do that in different ways. What's special about what the Australian Securities and Investments Commission has done is that we have issued a class waiver from some of the licensing requirements to allow a limited range of intermediary services to be done, including with retail clients, without a license. They're still subject to a whole range of conduct obligations. So they're limited normally in time as to the scope of what they can do, the caps as to what they can do, and there are all sorts of ways of allowing businesses to test concepts and pivot their ideas.
Next one.
Yes, maybe let's start by mentioning a few initiatives we took in the Netherlands. So we are active since the beginning of 2016. We started with an innovation hub, also together with the Dutch Central Bank. And that's open for questions from both new entrants and incumbents. The second instrument we launched, that was a half year later, was the regulatory sandbox. And I have to say that was heavily inspired by the Financial Conduct Authority in the UK, so give them the credits for that. But the difference is with these sandboxes has a lot to do with the different regulatory environment, the different administrative laws, private laws that are out there, so that those kind of rules set out the room for maneuver for us as a regulator. We also have to protect the rules that were issued by European legislators. So most of our rules are from European legislation, or emanate from European legislation, I'll have to say. So back into what our sandbox means, or what it entails, is it's captured by a document that is called More Room for Innovation. So if you're interested, you can have a look on our website. And that basically means that we as regulators want to work more with a principle-based approach. So so safeguard the basic principles in the regulation, not getting into the nitty-gritty details from the start, and then see how things play out. So if certain rules cause friction, sometimes we just have to adapt with a different kind of interpretation. If we have to deal with more rule-based regulation, it's a bit harder for us. Okay. So for instance, we had some companies, and maybe it's interesting to give an example, we had some companies wanting to start a trading platform. As a trading platform, you would need like 730,000 euros in capital, and that's a lot. But it's a rule-based norm, so okay. That's when we start talking to European legislators, to our own legislator, to explain to them why those rules, in certain cases, are not proportionate.
Okay, and Richard, does that correspond with your view of Sandbox there in Abu Dhabi?
Yeah, absolutely. So if I can just give a very broad commentary on that front, at a high level, in each different jurisdiction, you have commonalities and common understanding of sandboxes. But I see 4 different key themes emerging. So you have one group of jurisdiction, regulators that have not introduced any sandboxes, or really have not tried to license FinTech players quite separately, for different reasons. Some of them are afraid of the risk. Some have to bear in mind what the local institutions in terms of competition. Others think that it's too difficult. So if you look at 2 of the most vibrant and robust ecosystem in terms of FinTech, US, there are too many different agencies. And a sandbox set up by one agency may not be effective because you need the cooperation of other agencies. The lines at the borders are blurred. China, very vibrant. You have truly transformation stuff in the payment space, in banking and investment. Again, no sandbox as of now. I think part of the reason is really because a lot of players prefer to innovate quickly, prefer to get up to scale very quickly before the regulators come in. They do not want the regulators to interfere. And the regulators, I think, are afraid that because of the robust demand, you do not have enough resources to cope if you create a sandbox.
I suppose China was already one big sandbox in the development of the FinTech sector there. It was permissive and allowed a lot of experimentation before.
So the entire thing is like a sandbox, right? If you look at the regulatory framework in China. Then you have some defensive play that we see in the marketplace. People that create sandbox because my neighbor has it, other regulators has it. They have not really looked at what's our criteria. I've not spent that much time looking into that space. Some view it as synergistic to a vibrant financial institution and sector they have. And their tendency is to get FinTech innovators to work with existing financial institutions. And then others where the local environment is enabling, there are huge pain points in the society. Those you can try to bring in more room to maneuver and play. I would say Abu Dhabi, Middle East, Africa fall into the last category.
And Buncha, what about Thailand? Is it a different approach? Is it sector-led or technology-led, or is it?
Yeah, there's some similarities and also some of particular point that we want to mention. I just want to elaborate a little bit further than the other speakers. That in Thailand, for example, we introduced the Sandbox as another policy that we can, like central bank, we want to be more proactive roles in terms of promoting innovations. It just step and wait until the banks come in and then with that. And I think that we just launched the Sandbox policy last year, and until this time, we quite achieved our objective that I just already mentioned to you. The first, we want to promote innovations, and we want to make sure that all the risk management is already preserved, and also the consumer protection are also well protected. So by doing that, we think that we also have to balance between some kind of existing players and also the new players. And by using the sandbox policy with accommodative regulation, so we can see, we can work with them, we learn with them, and we go with them. And until we see that things is become more mature, so that we can bring back the experience from outside. We beacon ourselves. Most of the time, the central bank try to be in the regulator way, have somebody else and watch the eye on them. But this time, we work with them, and we go with them closely.
Okay. And so you all really sort of touched on this second one, but I'll just touch on it. Do you think sandboxes are the most important part of a broader regulatory agenda, or just one part of it? Because we've seen the rise of innovation offices, cloud guidance, API, open banking, et cetera, and waivers. There's a whole range of different tools that regulators are now using. Are sandboxes even the most important one, or are they just part of the new toolkit? Mark, I don't know.
Yes, I think the sandbox to me is just a part of the picture. So just to go back a bit on what the work ASIC does, is that we launched an innovation hub a bit after the UK, so again informed by the work of the UK. And at the heart of it, it is about making available senior staff to provide informal assistance to FinTech startups. And I think that is a significant contribution. So in Australia, we've engaged with over 200 entities since that time. And it's not about giving relief. It's not about special waivers. It's about informing and understanding what they're wanting to do and how the framework works with them. I think that is a really crucial component. The second component is flexibility in the way that you apply your laws. So there is already quite a considerable amount of flexibility in the licensing framework in terms of what a FinTech startup chooses to do, advice in relation to securities, in relation to wholesale clients. So you can choose what service you wish to do, so there's flexibility there. You could also operate as a representative of an existing licensee, and many FinTech startups do that. They don't even need to approach the regulator. They can reach a commercial arrangement with an existing licensee and start business. So they are all parts of the existing picture, and we too have the ability to give individual relief. So like some of the entities just mentioned here, so in the world of marketplace lending in Australia, where that service was provided to retail clients for the first time, they needed some individual